let's start with the first of the different modules. First one is the general ledger. So we'll be taking a look at what is general ledger and how transactions are being done, entered and monitored and tracked and so on. Okay, so let's first take a look at what is the general ledger. So general ledger is a place where transactions from all other applications, all other modules come into the general ledger. Okay. All financial data, remember, all financial data has to come into general ledger ultimately. So whether it is from payroll, whether it is from payables, receivables, assets, cash management, from everywhere, whenever there is an entry made against a financial account, okay, debit, credit, whenever that is being done, that has to be taken into GL. Okay. Okay. Now, how do we capture all of that? There is something called as a key flex field, which is called as the accounting key flex field. So in the accounting key flex field, we have to define different segments. So once we define the different segments, through that, you will be able to enter and monitor all financial transactions. Okay. So if you are not familiar with the financials part of it, please read up on the Google. There are a lot of things relating to financial accounting. Basically, every transaction is of one of these types. These are the different types of accounts that are there: assets, liabilities, revenue, expenses, owner's equity. And these are entered in some module or the other. For example, if you are purchasing assets, laptop or a building or a construction project, that's like your asset, or a motor vehicle, that's an asset, right? So those things you will enter and maintain in your assets module. Liabilities is what you're supposed to be paying. So you will pay to your vendors who are giving you services or products. Then you will be paying your different, the utility providers, electricity company, or your internet service providers and all that. Okay, that's your liability. Revenue is what you're earning by selling your product and services. Expenses are those things that you spend on in course of generating the revenue or the liability, office expenses, employee services, or your employee salaries, then your different expenses, employee promotion or business promotion or auditor fees and so on and so forth. And owner's equity is the capital that you invest in your business. Now, each of them have a separate module where you are tracking all that information. And all that information has to ultimately reach your general ledger module. Everybody clear on this? So general ledger is the central repository of all accounting information. And the main purpose of the general ledger system is to record financial activity of a company and to produce financial and management reports to help people inside and outside the organization make a decision. For example, if you are, if you are a stockholder, okay, if you are a shareholder, you want to know how the company is doing. If you are investing in the stock market, you want to know how the company is going to grow in the next 1 year, 2 year, 3 year, what is its the order book, how much it is supposed to earn in terms of revenue and so on. So that you can get from the financial and management reports that are published. It is mandatory for the publicly traded companies to publish all financial details. So whether it is a company like TCS, Infosys, Reliance, ITC, any company which is publicly traded on the stock market, all their accounting information is published. So for publishing, generating the accounting information, we need to use the general ledger module. So this is the pictorial depiction where information from all other modules is coming into general ledger. So wherever there is even a rupee spent, that should be accounted for, is what people expect. Okay. So in general ledger, you can enter what we call as journals. Okay, journals are individual transactions which have a debit and a credit, at least one line of debit and one line of credit. And they have to be entered in the general ledger module. And you can either enter them directly in general ledger, or you can import the transactions from payables, receivables module into the main general ledger. Okay. So you can record, you can review, you can analyze, correct, adjust. That is what they're talking about. So a lot of times what happens, you have transactions coming from the other modules like payables, receivables, assets, and then you find either there is a mismatch or something wrong or some changes need to be done. Those things you can do in general ledger, okay, by passing additional entries or making changes to those entries that you receive from there. So this one talks about the features. So you enter and collect the information, which is your data collection. You give information access. You have financial controls. And you do financial reporting and analysis. Okay. Now, typically, yeah.
What was that earlier? Like there is a flow, earlier one.
Yeah, this one is just like from other places it's coming, and you can do different, transactions on those journals. You can edit them, you can make changes. So here, this one is the financial controls. That means there will be some amount of control as to who can do what. Not everybody can touch the journals because those have financial implications. So they can go for approvals. They can be entered, but you can have different access control. So this one is typically a flow for the accounting cycle. Okay. So the cycle goes like this. Every month, usually accounting periods are monthly, usually 4 weeks or for 30 days, depending on how it is defined. So you open the period. In an open period, you can create journal entries. Okay, you can create, you can modify, you can reverse them. Reverse means opposite of creating. So that is like nullifying. Then you can post them. Post them means the balances will get updated. And then you can check whether it is correct or not. Then you can revalue or translate. That means you can, suppose you have acquired a building 20 years back. Okay, you have entered it in your books of account at the price it was 20 years back. But in 20 years, there has been escalation. Okay, so due to that escalation, the company is now going to get additional, their balance sheet value will go up, right? So the building was, let's say 20 years back, it was 10 lakhs. Now that value has gone up to 50 lakhs or 80 lakhs. So now the value of your balance sheet, value of your assets is going to go up. So that is your revaluing, translating, or you have to, convert that from a different journal, from a different currency For example, you bought an asset in USA 10 years back. Okay, now in 10 years time, the price may not have gone up, but the dollar rate has changed, right? 10 years back, it was 44, 45 rupees. Now it is 80, 85 rupees. So naturally, there will be a difference in the valuation. And then you can do what we call as a consolidation. Consolidation means collecting all that information in one single place. And then you have review correct balances. So every account will have certain balances. Okay, so at the end of the period, this is what your balance is. Just like your passbook has a balance, just like your, every month, whenever you do transactions, you get a balance as of the last date, right? You have an account with HDFC, Axis, State Bank, Bank of India, Canara Bank, whatever bank you have, they will give you end of the month, what is your balance, right? Every time you do a transaction, it can be a debit or a credit. Accordingly, the data will go up or down. Okay, so this is your overall cycle in terms of the accounting cycle. Anyone, any question on this? Okay. So general ledger integrates with all other modules. That means all other modules will be sending their data into GL. Okay, you can do a transfer to GL. There is a process by which you can transfer the data from payables or receivables into GL. And similarly from other modules, whether it is inventory, purchasing, projects, payroll, most of this information, if it is related to anything related to finance, will have to come into GL ultimately. Also, it will integrate with other business intelligence or reporting tools like Financial Consolidation Hub, Enterprise Planning and Budgeting, financial services applications, daily business intelligence, activity-based management. These are all additional modules, additional reports, additional, these are what we call as the analytical solutions, okay, analytics, where you can use the data, transaction data, to generate different kinds of reports. And when it is coming from other modules, subledgers, there is something called as the GL interface. Okay, through the GL interface, there it is basically a set of tables. So all data from subledgers will first come into GL interface. Okay, after it comes into GL interface, it will be imported. Hello. Hello. हाँ भेज दिया है, अप्रूव भी हो गया. Okay. So you have from the subledgers like payables, receivables, and all that, you send that data into, there is a process. Okay, there is a program. Using that program, you will transfer that into GL interface. From there, you will run a journal import program, from where you will be able to see the journals in your journal screen, actual journal screen. And there, once you post it, it will go and update your balance. Okay, and once you update that balance, there are separate set of tables called GL balances, where that data will be populated. Right? Now, in case you have to import data from other applications which are not part of Oracle application. For example, you are getting a data from Tally, or you're getting a data from SAP, from PeopleSoft. In that case, you might be using a PLSQL package or some program. For that, you will have to populate your GL interface table, and then you have to run the journal import. Once you run the journal import, then the data will come into the actual general ledger tables, just like we showed here. Okay. So if it is from other modules, then you will first populate the data here. So you will have one link here where the data will come into the GL interface. From there, you can do a journal import, and that journal from an external application will come into Oracle General Ledger. Okay. All right. Next, we talk about Accounting Setup Manager. What is Accounting Setup Manager? Accounting Setup Manager is actually a central place where we will be defining all our setups. What are our setups? Setups like yesterday we talked about legal entity, operating unit, ledgers, right? So you will be defining all of that in those modules. Legal entities, operating units, primary or secondary ledger. Then you have reporting currency, subledger accounting, intercompany, intra-company balancing, accounting and reporting sequencing. So all these things you will be doing in one single place, Accounting Setup Manager. All right. Now, in general ledger, there are three key things to talk about. One is called conversion, one is called revaluation, third one is translation. Okay, what it basically means is, like we were talking about a few minutes back, if there is a conversion, that means it's usually at the individual transaction level, from Indian rupee to US dollar, or from US dollar to British pound, or from yen to US dollar. So that's the conversion. You enter the currency in one, you enter your transactions in one currency, and it will get converted into another currency. Revaluation means you are revaluating all your balances as of a particular date. So you might have entered transactions at the rate of 80 rupees, but today the dollar is at 85 rupees. So you will have to revalue them, right? Similarly, translation also, as of a cutoff date, you might have to reconvert everything from the particular value. Okay. So how do you handle multiple currencies? So when you have multiple currencies, there you can handle it like in ledger. If you remember, yesterday we talked about 4 C's, right? Chart of accounts, calendar, convention, and currency. Now, if there is only one currency, then it's fine. You can use the main ledger, no problem. But if you have more than one currency, then if it is just simply about reconverting the entire books into another currency, you can use what we call as a reporting currency. Yesterday, I gave you that example. Let's say a company like an Indian company is listed on the American Stock Exchange. They will have to convert that data from Indian rupees to the US dollar. That you can do using reporting currency. If any of these three things change, then you can have a secondary ledger being defined in the application. Because moment you define a ledger, you have to define a different currency. And that currency can be different in a secondary ledger. You can also set up rules where you will convert from the main currency from your main ledger, primary ledger, into the secondary ledger. budgets is basically when you define budgets in the system, you can track your budget. So in the beginning of the year, you can say, I'm going to spend 10,000 rupees, or I'm going to spend 20,000 rupees, or I'm going to spend 80,000 rupees on a particular wage or supplies or conveyance. And then you track how much you have spent. If you have overspent, then you either need approvals, or you might cut out the amounts from one head and put it into another head. Okay, let me just see if there is. Okay, let's now go into the application before we go further. Okay, let me just show you how we can define all of this in the application. Anyone got any question at this point of time?